Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 19th, 2025, and we're diving into Griffon's latest earnings report for the fourth quarter and full fiscal year. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Griffon has just released their earnings, and there's a lot to unpack, especially given the challenging economic environment they've been operating in.
Revenue and profitability overview. Let's start with the top line. Griffon reported a revenue of $2.5 billion for fiscal year 2025, which is a 4% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily due to decreased volume in their consumer and professional products segment, which faced reduced consumer demand in North America and the UK. However, it's important to note that their adjusted earnings per share for the fourth quarter came in at $1.54, slightly below the forecast of $1.56, but still an improvement from $1.47 in the same quarter last year.
And what about their net income?
Net income for fiscal 2025 was $51.1 million, significantly down from $209.9 million in the previous year. This drop is largely attributed to a substantial charge related to goodwill and intangible asset impairments in their CPP segment.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did Griffon's home and building products and consumer and professional products segments fare?
The home and building products segment maintained steady revenue at $1.6 billion, with a slight decrease in EBITDA due to higher material and labor costs. On the other hand, the consumer and professional products segment saw a 10% decline in revenue, but impressively, their EBITDA increased by 18%, thanks to their global sourcing expansion and cost-cutting measures.
It seems like their strategic initiatives are paying off, especially in the CPP segment.
Indeed, the CPP segment's focus on operational efficiencies and expansion in Australia has helped offset some of the volume declines in other regions.
Cash flow and shareholder returns. Moving on to cash flow and shareholder returns, Griffon generated $323 million in free cash flow this year. How did they utilize this cash?
Griffon used their robust cash flow to repurchase 1.9 million shares, totaling $134.7 million, and they also returned $174 million to shareholders through dividends and buybacks. Notably, they announced a 22% increase in their quarterly dividend to 22 cents per share, reflecting their confidence in future prospects.
That's a significant commitment to returning value to shareholders.
Absolutely. And it also highlights their strategic focus on maintaining a balanced capital allocation strategy, which includes debt reduction and investments in business growth.
Future outlook and strategic plans. Looking ahead, what can we expect from Griffon in fiscal 2026?
Griffon is projecting revenue to remain steady at $2.5 billion, with adjusted EBITDA expected to be between $580 million and $600 million. They plan to continue focusing on share repurchases, reducing debt, and investing in their business operations.
It seems like they have a clear strategy in place.
Yes, their strategic plan is well-defined, and they are confident in their ability to execute it, as evidenced by their recent dividend increase and ongoing investments in capacity expansion and technology.
Key takeaways. In summary, Griffon has navigated a challenging year with strategic initiatives that have bolstered their profitability and shareholder returns. Despite a dip in revenue, their focus on operational efficiencies and strategic investments positions them well for the future. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Griffon's performance and outlook.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Griffon's performance in the comments below.